So, Jeffrey, you so rightly told me last time that you were looking for a steeper yield curve. And it's exactly what we've gotten, as you alluded to that. Why do you think rates have backed up on the long end the way that they have?
People are worried about the interest expense on the Treasury debt, and they're worried about the fact that the budget deficit is 6.2% of GDP while we're in an extended economic expansion. So they're worried that the interest expense is going to be out of control because it's risen by nearly $1 trillion over the past decade in terms of how much money the interest expense is. So I think that that's really the problem. And it's interesting that the Treasury issuance of the last 12 months, only 1.7% of the Treasury issuance over the past 12 months is 20 years or longer. It's this trivial fraction of the debt issuance. 84% of the debt issuance over the last 12 months is T-bills. So the T-bill market is massive compared to the rest of the total fixed income market in the United States. I'm talking about all sectors combined. T-bills are something like 2/3 of all of the securities that are out there. So it's interesting that long-term interest rates still are rising as the Fed is cutting rates when such a small fraction of the issuance is long-term Treasury bonds. So I just think that the rise in long-term interest rates is not just a U.S. phenomenon. It's happened in all developed countries. We've had the same rise in the U.K. as in the U.S., over this rate rise period from 2022. And we've had Japan and Germany go up, not quite as much, but they've gone up a few hundred basis points as well. So I believe that's just a global phenomena in the developed world, certainly, that people don't trust the way these finances are being handled. Mm-hmm. And for that reason, gold has had this ridiculous return. Gold is up this huge amount this year, and silver is up even more, which is actually not a great sign. When silver joins the speculative frenzy of precious metals and it starts to really outperform, I mean, silver's up over 100% this year, usually that, I'm afraid to say, starts to foretell some sort of a problem, some sort of a financial problem. It doesn't mean it's coming anytime in the very near future, but it's a bad sign when silver goes to join a wild speculative frenzy. So I still think that gold has a place in a portfolio, but I also think commodities broadly have quietly started to rally. If you look at the Bloomberg Commodity Index, it's been rising, and now even its 200-day moving average is rising. And of course, the actual value today is above its 200-day moving average. So for the first time in a long time, I turned positive on commodities broadly last week. So I think a commodity index makes some sense in here. The one thing that's not inflating seems to be crude oil, which is very positive for the inflation side of the dual mandate of Powell. And I think one of the reasons that he's downplaying that side of the dual mandate is because the price of oil has been gradually declining for quite some time now, and it seems to be forecast by the shape of the oil futures curve to be in the high 50s for the next 12 months. That doesn't mean it's going to happen, but it's very rare that you have the oil futures curve predict no change in oil one way or another over the ensuing 12-month period.